Hello, my dear friends. This is a follow-up on the video of yesterday that was titled Miss the Bottom. But now I will show you the charts that convinced me that I missed the bottom and also some other charts. So this is the chart that was made by the great um, Checkmatey. He's on Twitter. Follow him. Really amazing chart. Goes back to 2011, showing the NVT and the RVT, but averaged in 28 days. That's the orange line NVT and the blue line RVT. But most importantly, showing where it's coming from, and it's all coming from the realized gap, the black line. I have really neglected this indicator, and it has costed me. This indicator is very interesting, the realized cap, because it's a different way to calculate the market cap. You see the market cap of Bitcoin here since the start 2011, the first bubble here to $30. And collapsing the next bubble to $255, the next bubble to $1,150, and next bubble to $20,000. But the realized cap is a different way to calculate the market cap, because the problem is that if you calculate market cap, you just multiply all coins in circulation with the last market price. But in the case of Bitcoin, many coins are lost, and this is a unique situation that you don't have in other asset classes. For example, with shares, when you calculate the market cap, well, all shares are in circulation. If somebody dies, the shares will just go to probably a big piece of it to the state as usual, and what's left over to the inheritance. The children are, but this is not the case with Bitcoin. People can lose their keys and nobody can get access to the coins anymore. And there is, I don't know what's the estimate case of Bitcoin, is 15 million or so in circulation, 16, 17 million. There is an estimated about 3 million or so lost. So if you calculate market cap, actually that's not representative. These coins are dead. So another way to calculate it is to calculate only the coins that are moving, because you have evidence that they are alive. And this is what happens here. They just always calculate the value of the coin that moves based on the market price when it moves. And so, for example, an old coin that never moved at $1, or the last move was when market price was $1, continues to be valued at $1 even up until today if it hasn't moved, and so it's not included in the market price. To the contrary, a coin that does move and that hasn't moved for let's say 3 years, and the last price was $100, and now suddenly it moves again. The new market price is now $8,000, so the value from that coin goes up from $100 to $8,000, and that's how you see that the black line, typically during bubbles, a lot of old coins start moving, get revalued, and go up, and therefore the market cap, the realized market cap, goes up. But what happens then in bear markets, or even strong bear markets, is that the realized market does not go down. Why? Because yes, here that get traded again and move again at a lower valuation. This pulls down the market, the realized cap. But at the same time, there are always some old coins also popping up and getting traded, and they go get revalued at a higher valuation. The net effect is that actually the realized cap actually doesn't even go down here. During this first strong bear market, it continues to go up. It's only in the last part where it goes down a little. But what's very interesting to see here is you can conclude from the realized cap basically the amount of money that's you could say invested in that coin, because every time a coin moves, somebody is paying a higher price for it and investing at that valuation in the coin. And you can see then during bull markets, like yes, you have trading of coins. They get bought at higher prices. The realized cap goes up, but the actual market value stays above it as prices continue to go up. So everybody is in profits basically. But what happens is that there comes a time during strong bear markets in 2011 and 2015, and it was also the case in 2018, that the actual market cap goes below the realized cap, and that from then you can say that people on average are underwater. Huh? And this always has coincided with the bottom of the cycle. Here in 2011, the realized cap goes up sideways, and that's from to $30. $30 dropped to $3, so we go way below the realized cap. But it's also at the early stages here that you see that the bottom is found. Huh? The same happens here. Once it goes below realized cap, the bottom is found very quickly. And well, very likely this has happened again recently last year. Um, why? It makes logical sense also that the bottom happens uh, quickly once the market cap goes below the realized cap, because well, on average, people are at a loss. So that means that most people stop selling. Huh? Yes, there is certainly a big piece of the market that will panic sell there and sell at a loss. But most capital, once they are at a loss, they don't want to sell, and they just sit on the coins, and so the supply goes down of the amount of coins. Huh? I think this is the explanation why you see the bottoms pretty quickly, huh? Here, because the supply goes down. But this is just a guess of mine, not supported with scientific evidence whatsoever. Um, so that's interesting to see. And actually, there is an indicator that's called when you divide the realized market cap over the market cap, the actual market cap, is called the MV, market value over RV, MVRV. And you can see that indicator MVRV was also shared by Owen Wonder, our hero from the logarithmic trendline charts that he made at the time, and I've been sharing a lot. But this is another piece of an article that he made about the MVRV ratio before, when Bitcoin Core was still at 6,000. He made this article in October of 2018. And he predicted that, you see the MVRV ratio looks very much like what we just saw. Once the market cap goes below the realized cap, you have it goes below 1. And this happened in the bear market 2011, bear market of 2014, 15, and here it didn't happen yet in October, but he predicted that it would happen soon, and that would be the bottom. Huh? Here he says so we will likely go again below 1, huh? But probably not as deep, because the trend is that we go less and less deep, and also we go less and less high, and therefore that makes logical sense. As markets grow up, market cap becomes much higher, volatility goes down in both directions. But he did say that the market duration of the cycle does go up over time. And we haven't seen that yet. But indeed, his prediction came through only a month, 2 months later, where indeed again negative. This is the chart of Bitcoin, MVRV on Coin Metrics, and you can see that we went here in 2011 to a low of MVRV of 0.4. In 2015, we went to a low of 0.56. So higher, and in 2018-19 we went to a low of 0.7, I think it's very interesting, and this convinces me that likely the bottom was in. Yeah. I made the big mistake actually of when this happened. I made a video with the Trollo chart that hey guys, we're now at minus 50% chance undervaluation to the trend line, and this is for all coins. This means that chances are going up a lot here that we are actually seeing the bottom. But I did say that, and I did invest, but I said that actually it's still only a 40% chance that we see the bottom here. So I recommend to go to a not a majority exposure, but a big minority exposure of 40%. That's what I recommended, but it was wrong, I believe today, because it was not an increased chance that we saw the bottom. It was actually a high chance that we saw the bottom, a majority chance that we saw the bottom, and therefore a majority exposure was justified here. Um, and yeah, I mean, because indeed, just like with the MVRV, once we go with this below the trend line, the logarithmic regression trend line, once we go below that with the total market cap of all coins or of Bitcoin, it applies there too. We also find very quickly the bottom. It looks very similar as the MVRV ratio. Yeah, I think this is very interesting, huh? And it aligns. Of course, we have much more information today than we had when we reached this bottom for Bitcoin at 3,150, and it was about 110 billion total market cap. Since then, we saw something happen. Bitcoin went up a lot, from 3,000 to 14,000, and we went from an undervaluation of 50% back to an overvaluation of about 30% was the peak. And now we've been correcting. This is only till 10K, but we're at 8K, a little bit lower for Bitcoin. But this is, of course, total market cap. We're now at not minus 22, but we are at actually an undervaluation of minus 36 today. But this is new information that can guide us, because what does that mean? It means this is a different kind of bear market than we had in the last cycle of 2014, 15. What happened there was no strong rebound. Once we hit the bottom, there was no strong rebound that went above the trend line. No, it went sideways. And this is why I here held out. I said, look, guys, the chance is high we go to not minus 70, but minus 80% undervaluation. And therefore, I would wait it. But this is, of course, something that, well, it depends what you want to achieve. But if you want to invest at the bottom, you shouldn't be waiting for the maximum undervaluation, because that is not reached at the bottom in previous cycles. Also not. It's reached later after a sideways movement, and actually the bottom, fiat bottom, is always at minus 50% here. It goes into higher undervaluations, but these are not fiat bottoms. Fiat prices are then higher. And so my goal was to invest at the fiat bottom, and I should have be more aware that I shouldn't wait for a minus 80% undervaluation, even though that is still likely when we're here. I think now maybe not so much anymore, but actually when we were here, it was still likely to go to minus 80% undervaluation, but that still means likely a higher fiat valuation, huh? But okay, what happened in the meantime is that we have a bear market similar to 2011 and not to 2014. And that is very interesting, because we can actually look more here what's likely to happen. So here in 2011, we also went under the trend line and then back above it, and then back below and made lower lows. So I think it's still likely we will make lower lows, and we'll see undervaluation of minus 55 and even minus 60% like we did here. But that does not mean lower fiat valuations. Actually, no. We won't see lower fiat valuations than we saw at the bottom. So how did it look in 2011? Of course, the trend line went up much quicker there than here. But it made a very strong rebound when it went from $30 to $3, it went back up to $15. Very similar to what we saw in the recent rally. Huh? And then it corrected halfway, went sideways and up more. Yeah, I think, but up more, it went up again, but the gap between the trend line and the actual price went up. That's why you saw a higher undervaluation to the trend line. This can certainly happen again today, where we indeed go halfway from 3K to 14K. Halfway is uh, yeah, it's about 6 to 8K where we are. Huh? So it's certainly possible. We're now at 8K. We make one more leg down to 6K. We make a new high in undervaluation if that would happen. But from there, we go sideways the way we did here, but not so steep. We go sideways actually much more flat. And so the price goes like this, stays like this here and then goes like this. And this is total market cap. This is all coins, but it basically goes like this. And the gap becomes bigger. You make a final wick down, and you make a new high in undervaluation. The first time maybe it's in next month, but the next time maybe it's only in half a year, where you are further from the trend line. And yeah, I think that's still probable. Very probable, actually, for the most part, because of what we saw in the past. And I think this is very important to see is this trend line very likely is seriously overrated. This trend line points to an average valuation of 3 trillion by 2023. 2023. This is my estimate of the next cycle, the duration. But I made a big mistake here. I point to a peak of 20 trillion, but actually I don't think this is correct, because this trend line is not will prove to be very likely in 3 to 4 years, will prove to be not an average valuation but a top valuation. And we are here at 3 trillion. That means that prices, this white line, will actually peak out here, not here, here. So higher, much higher, of course. We went to 800 billion. We peak out the next bubble at probably 4 trillion or so. That is 4 or 5 times higher than the last, but you can see that gains will be much less than in previous cycle. So why do I believe that to be the case? Because it was always the case in the past too, with Bitcoin Core. This is someone who's doing the exercise of curve fitting. The curve fitting is creating a trend line through the prices. And if you start with Bitcoin in 2010, the trend line would look something like this. This fits the prices the best. But then after the first correction in 2011, you can see that, this trend line doesn't work anymore. Like, many prices are below it, way too many. It has to have another form. And you end up with a different form, this form. When you go through the first bubble of 2011, actually, if you want to have all prices as close as possible to the curve, this curve needs to be not pointed this way, but pointed that way. This is also a logarithmic chart, where prices always tenfold. Then it looks like this, and this is indeed also how many other growth curves look of other startups and technology that's being adopted. They grow slower over time. That's why the curve looks like this. As you need to tenfolding becomes always much more difficult. So what you see is that if you draw a trend line like this, then you can think like, okay, probably future prices will go around this. But what's end up being is, once the next cycle has fully played out, you can see that the previous trend line really doesn't represent average prices. Actually, it doesn't even go to the top valuations, don't even hit that trend line. So you need to adapt it again, and you draw a new trend line that goes through all prices, and it is adjusted much lower. You used to think, this will be the future, but actually the future ends up being this. So you have to adopt the trend line and go through all prices, and the curve goes down a lot, needs to be pulled down a lot, what has been done here. And now you're again between all prices, but the future points to lower valuations than before. And once the next cycle happens, this was 2013, this is a cycle that we just saw from 2014 to 2017 peaking, and then a bear market 2018, 19. All prices are again below this curve, meaning it has to be adjusted again downwards. So this is the line that we see today, and this is also the line I've been using. That was last drawn by Owen Wonder with data that went up until the 3rd of May. So it's not, this red line is not up to date, but because since then, the 3rd of May we were here, prices have gone up. Actually, it's probably still quite representative because prices have gone up. But usually in these bear markets, prices stay below this trend line, and so the pulling down of the trend line starts to happen immediately, strongly. But it is very likely actually that we will see the same happening again, that prices will stay below this trend line and will pull it down. And of course, this is not Bitcoin core. This is the trend line of all coins, but I think the same effect plays. It doesn't matter whether you look at just Bitcoin or all coins. Yes, I would say that the future looks much better for all coins than just for Bitcoin because of mismanagement and poor fundamentals of Bitcoin core. But this was not the case before 2017, 16. It was only since then that Bitcoin core started to be managed very, very poorly and lost a lot of market share. And I expect will grow, will really see will really disappoint in future growth because of it. But this is only very recently that this happened. It happened here, and probably didn't influence. I influenced Bitcoin's market dominance already, but we still had a very nice bubble because most new investors don't care about the fundamentals of Bitcoin core weakening. So they just take the market lead, and I was just still Bitcoin core. So I didn't play that much, but I think it will play a lot more in the future once other coins clearly start to close in and probably overcome, become bigger as Bitcoin core. Then Bitcoin core's future trend line will probably like really disappoint and go. The growth will go down a lot. This is also what I predict in this investment plan. Like if you want to estimate future valuations, it's very important to get an idea what's the potential here for Bitcoin Cash, Ethereum, and Bitcoin Core. And my best estimate is that Bitcoin Core will peak out lower again than the previous cycle. In the previous cycle, Bitcoin Core, when it had its top valuation, it had a 40% market share at the peak of the 800 billion, and Bitcoin Core peaked out at a 40% market share. It was much lower than in previous cycles. In previous cycles, it peaked out at, let me show you. The first cycle in 2011, Bitcoin Core peaked out at 98% market share. The second cycle in 2013, it peaked out at 82%, and the third cycle, it peaked out at 40%. So you see it's cut in, like here it loses like a lot of market share because many new coins come on the market, but it's really collapsing because it peaked out at 80% and now it only peaked out at 40% in a previous cycle. So my estimate next cycle, it won't peak out at 40%. It will lose again 60% market share is what I count here, what it did in previous cycle, because it continues to be managed poorly. And so it will peak out only at 16% market share, whereas the total market will peak out at probably like 4 trillion. And that's a positive estimate, but I think is most realistic. The trend line points to about 3 trillion that will peak out. So a safe margin is to go out when we hit that 3 trillion. And that's also when we hit 350% overvaluation to the trend line, then that will be pulled down by then. But I think it's likely we will peak out at 500% overvaluation to the trend line I estimate the trend line will then be around 600 billion. Today it's already at 300 billion. Um, so this is like really a conflict. Like the trend line actually today is going up very fast. Every time I update this sheet, it can be only a few days. You have to add a billion here to the trend line. It goes up very fast, and that's why you can see it go up fast here also in the early period. But something is going to happen very likely that will cause this growth to go down a lot of the trend line. And now it's going up with a billion per day, but very likely it will stop doing that. It will only go up by 0 point, like not a billion but 100 million per day, 10 times less over the next few years, because in 3 4 years it's expected to be only 600 billion. So this can only happen because prices will be considerably lower than they are today, and they will stay there. Only then that can happen. But what does that also mean for Bitcoin Core? If it peaks out the next cycle like at 16%, while total market cap is 4 trillion, that means the peak is only at 30K for Bitcoin Core. That's my estimate. I am biased for sure. I really am angry about how Bitcoin Core was hijacked. Bitcoin, our beloved Bitcoin, was hijacked by really like either totally incompetent people or evil forces. I think it's the latter. Uh, I think these people are like there is yeah, I don't know, it could be either, but like the total mismanagement of Bitcoin Core, allowing the transaction fees to explode. Nothing can be built on top of it anymore. You can't even use it as a simple payment system anymore. It's now $1 per transaction or so. You can't count on the transactions being final because they implemented things like replaced by fees. So you can't trust the transaction anymore without a confirmation. Like all kind of like absurd things you would never do if you work in the best interest of it. It has happened, but I think it will also go show in the next cycle where just simply the dominance of Bitcoin continues to go down. It's not like not predicting something new here. It has happened in the past. It's just extrapolating what's been happening already the past 3 years, 4 years. Just extrapolating it, it will still peak out at about 40% of previous. That means it will still peak out at 16% dominance, but that does mean that it's only 30K. And 30K is not that much higher as today. Of course, people will make money if they hodl, but they will make nothing compared to the new leader, Ethereum, that will, at the end of the cycle, become bigger than Bitcoin Core. And Bitcoin Cash won't become bigger yet, but it will become half of what the value is of Bitcoin Core. And the total market will see a lot of new coins, because these three market leaders today represent 80-90% of the market. Well, the next cycle it will be 30% of the market, 40. So there's a lot of room for many other coins to take a piece of that market. Here I assume that Ethereum does not lose any market share. It's the same peak that they had the previous cycle, 17% market share they had when they peaked out at $1,400. And same for Bitcoin Cash at $4,000, peaked out at 7% market share. I assume that they won't lose any market share, which is a strong assumption, because it's very normal that you lose market share in a market that's expanding rapidly with many newcomers. So this is but I do think it is possible for the market leaders to not lose market share if they are managed very well, which I believe is the case for Ethereum and Bitcoin Cash. But what does that mean when you look at investment returns? Well, today you have only a 4x potential for Bitcoin Core. Well, this is the most likely, in my opinion, that you will make at the peak of the next bubble or the next boom, 4x. Ethereum 30x and Bitcoin Cash 70x. These are the potentials today. But it's very wise to wait for a correction. And why? Let's go back to the other charts here. I want to share also this one, because this is what really triggered it all for me. and it's a video, a very good video, masterclass episode 3, explaining the NVT ratio. It's published on Ready Set Crypto, but actually it's not made by Ready Set Crypto. It's made by Checkmate, Matey. I also shared his other on my Twitter, his other videos. Yeah, it's very, very good analysis. But I will just not show the video, but you really like, it's 1 hour long. It's really worth it. It's very good. But I will show one thing that I really like, and that is that um, it's another indicator to judge whether we're in a bull or a bear market, whether we're in a top or a bottom. And it also shows that we're much more in 2011 scenario here, the RVT and NVT, than in a 2013 14 scenario. And this was also why I was really like, yes, I missed the bottom. Like I didn't go to a majority there, and actually, I did go to a majority, but I sold the majority back off here because yeah, something wasn't right, and it was the NVT ratio. Like it was exploding to the upside, which is not indicative of an opportunity, but of a overvaluation. And So I was still thinking we'll make new lows, but that's actually not necessary. Only a big correction is good enough, and testing the bottom possibly. All that is still like certainly possible. And yeah, the NVT and RVT ratio are also showing us that we are not in a sustained bull market yet. This is what always happened in 2011 and 2013. After the bottom is hit, you have a sideways movement, you have a breakout. Then you can see that finally, after the breakout, when prices go up, actually not only prices go up, but also the amount of activity goes up a lot. The NVT shows you the amount of transactions compared to the value of the network goes up a lot. And also compared to the market cap, but also compared to the realized market cap, that's the RVT. Both of them go into low valuations, which means that it's used a lot. There are a lot of transactions compared to the value of the network, and that's when you can say like this is cheaply valued, even though the fiat value has gone up. The fundamental indicators such as NVT, which is the same as the PE ratio for stocks, is finally showing that actually stocks are relatively cheap compared to the earnings. And this is a great indicator to see there yet. We see something very similar than what happened in 2011. We had the bottom of $3, we went to $15 recovery. But what you see is at the same time, the NVT and the RVT also going up very high again. And this is suggesting that we will see a strong correction first. And it did happen also here from 15, it went to 8 or so, $8. And it recovered slowly. And I remember I started investing here at $10. But why did I start investing? Because I could see that the amount of transaction is going up a lot, even though the price is not going up a lot yet. And this is very bullish. And that's what the RVT and the NVT show here. Like we go below 10 is very bullish. It means like, yeah, prices are much higher than the bottom. But actually here you're much more certain that there is a future here because it's really being used, the network. And we are not there yet today, even though we corrected. This is not up to date. We were at 10K here. Now we're at 8K. So, but RVT and NVT are not at these valuations again, but they will come. And this will be a great, if the future is bright for Bitcoin Core, they will come, but they might not come there. I think it's very important to start switching your focus on other coins such as Bitcoin Cash that will show that. Probably because Bitcoin Core is not a valuable network anymore to use. On-chain transactions are very expensive, so you will see a drop off in the amount of transactions compared to the value of the network. So you really need to start focus on other coins here. But of course, the same trend will be seen also with Bitcoin Core, albeit probably less. You won't see these lows anymore, but you will see it go below 10 very likely again. But not probably to 2 or 3, whatever these values are. So yeah, very interesting, I think, and a big thank you to Check Matey for making this great video that I really recommend watching. This really made me realize that I missed the bottom because of what he's explaining here. Like once the RVT, NVT. Yeah, I'm not going to explain that. You have to watch the video for that. So I will leave it at this. Thank you so much for watching. Have a great day.